Hello and welcome to another episode of the Real Estate Investing Club. I'm your host, Gabe Peterson, and this is the place investors go to gain actionable advice, learn about current market trends, and hear war stories from other professional investors out there in the field today. Before we get started, I have two quick housekeeping items for you. First, if you like this episode, we would very much appreciate a like, subscribe, and share. It is the best way to support the show and keep it running far into the future. Second, if you're a new investor looking to get started in real estate or an experienced investor looking to take your investing to the next level, I've created an ebook just for you that will cover how to find deals that are actually deals, how to finance those deals with little to no money down, and how to exit those deals for maximum value. On top of that, I throw in an insane amount of free bonuses that you'll have access to once you buy the ebook. All I charge is our admin costs to keep this show running. So if you're serious about real estate investing and want to create both active and passive income as an investor, head on over to the website at therealestateinvestingclub.com and click on the button that says Get the ebook in the upper right-hand corner to grab yourself a copy. With that said, let's dive right in. Today we have a very special guest with us, ready to drop some investor knowledge on you. So buckle up, grab your pen and paper, and enjoy the ride. All right. Welcome back to another episode of the Real Estate Investing Club Daily Deal Review. As a reminder, the Daily Deal Review is where we have previous guests come back and talk about one specific deal, and we go into the details of it. Today we have Dr. Mike Lorence with us. He had an episode right behind this one day behind. If you're really interested in geo-niching and really getting the most out of your local geographic area, check that out. But today, Mike is here to talk about one deal. So Mike, where was this deal located?
Oh, this is all consuming right now in my life, Gabe. So this deal is located in Tampa, Florida, in the south central part of Tampa. It is what most people would call a garden style multifamily property, which just simply means there's no elevators in it. And it's a C-class value add property. So it's just over 200 units.
Perfect. So Tampa, Florida, garden style multifamily means no elevators. I actually did not know that, so that's interesting to know. And it's C-class. Sounds like it's a value add, so I'm excited to get into this. So next question: how did you go about finding this deal?
Okay, this was a deal that's marketed by Cushman & Wakefield, and they have a sizable amount of the deal flow. One of the main guy who runs the private client group left a previous broker and moved over. So that was kind of a big, it was a big shakeup in this market. And so a lot of his clients came with him. And so this was marketed by Cushman. We got involved in it a little bit before it got marketed. And so that's how we found it through the broker relationship there at Cushman & Wakefield.
Perfect. And what I heard there was relationship. This was a networking deal. It's somebody you knew. Deal came through that. So that's the note you guys want to take for that one. Moving on, how did you decide that it was at a good price? How did you evaluate this?
Okay, this one has a lot of moving parts. It has some Section 8 tenants in there, which if your listener has not heard of that, that is a government subsidy program where you have to meet certain income requirements to qualify. So the government basically pays a portion of your rent. And so it has Section 8 tenants in there. It's in a high growth area. And so there was two major sucking chest wound problems with this property. Number one, it has what are called stab lock panels, which are the old electrical panels that are on older properties, and they're known to cause fire. And so the current owner chose, for whatever reason, not to replace these things. Most insurance companies will not underwrite the insurance policy without a commitment to replacing them. So that's problem number one. Problem number two was it has aluminum wiring in some of the units, and aluminum wiring is known to cause fires too. So there again, that is, so depending on how you underwrote it, the underwriting model showed about $150,000 annual premium on insurance, which is like $700 a door. That's very high. And so that was part of the process that led into our thinking behind, all right, well, we know we're going to have to drop $500,000 probably to replace the panels, replace the wiring. Well, then that now then informs, well, is there enough other value add opportunity, enough meat on the bone to be able to take that big sucking chest wound capex that's going to have to be spent and recover it somewhere else. And the investment thesis was, yes, there's plenty of rent bump opportunity. This is a hugely growing property. It's on the
before you get into that, I'm going to cut you off real quick because it sounds like you're going into value add. I love where you're going, but
great. Sorry.
It's all right. I'm going to add one question real quick. So how'd you go about financing this deal?
Yeah, so we're in the midst of it now. Agency debt was the preferred method, but what's looking like we're going to go the route of bridge debt. And the reason, there's a whole bunch of reasons for that, but part of it's due to this wiring issue that has to be fixed, and agency lenders are a little skittish on that. So we're going to have to, and we're going to be able to borrow more money from a bridge debt because you can finance it to higher leverage, higher loan to value. It's interest only for 3 years. Then it amortizes after that, and then you're going to roll into agency debt after that to refi it. Cash out refi to roll into agency debt in a couple of years.
Nice, I like it. Can I ask what's the interest rate you guys got on that one?
I think the latest quote is 3.4, if I remember right.
That is great. Yeah, that's not bad at all, especially interest only. That's not bad.
Yeah.
All right, so now we're jumping into value add. So what it sounds like, there's a lot of fire danger or fire hazards that you guys needed to rectify. Just go through your value add plan. What's the strategy going into this one?
On the tour, so we took the tour, and I noticed this borders the river. There's a big river that flows through Tampa, and there's a big blank area with a big concrete pad. And I said to the broker, I said, was there a unit that burned down? And he said, well, there were 2 units that burned down, and they burnt down with 2 owners ago, and they pocketed insurance money 2 owners ago and didn't rebuild them. And so that was further proof that we're going to have to fix these things. And so the value add component is really basically going in, doing light rehab, changing out some of the finishes. There's about 40% of the units are renovated, 60% are classic. So that's basically going to be finishing out the renovation plan, new countertops, new paint, new fixtures, new light fixtures in the bathroom, new light fixture in the kitchen and dining area. And the exterior has all pretty much been done. It's been re-roofed. That was the other thing. It's flat roofs. Most multifamily syndicators like to stay away from flat roofs because they tend to have a much higher maintenance cost to them over the long term. They are a little higher to insure premiums, but this seller was smart and he replaced all of them within the last 12 months. So that was taken off the table. Plus the warranty transfers is assignable to the new owner. So, you basically reduce your risk.
Perfect. I love it. So, it sounds like this is something you guys are in the thick of. You're not, the exit is not on your mind, but whenever you go into a deal, you always have an idea of how you want to exit. Is this going to be a flip for you, or is this a long-term hold?
No, we do not like flipping's okay. Not for us. It's not in our DNA. We are buy and hold investors. And so we're typically model a 5-year hold. Sometimes, and I tell investors, I say, look, I 100% guarantee I'm going to be wrong on just about everything. I can't show an underwriting model where I'm going to be perfectly right on everything. We're going to be wrong. Where might we be wrong? We might be wrong on the holding period. Instead of a 5-year, it might be a 6-year, potentially a 7-year. So if you're not comfortable locking your money up for 7 years, this is not the opportunity for you. And so I just try to be upfront with people. Yes, the underwriting is showing a 5-year hold, but it could be potentially 7-year. And the reversion cap rate, which is the cap rate you're modeling at the end of the sale, the property, is important. The reversion cap rate needs to be higher where we are today than what it is today. So that will help de-risk the underwriting model as well.
Perfect. And going into that, the next question is just about the numbers. Exact numbers are not necessary here, but just give us a high level view. What are the numbers going into it, and what do you project to be going out?
Yeah, very high level. We're talking roughly 22 to 23 million in loan, 9 million in equity. The extent of the renovations, is going to be, well north of $1 million. And so, at a very high level, it typically is going to break down 1/3, 2/3, on the debt to equity for most syndications nowadays.
Yep. Makes sense. All right. So final question. And this one, it sounds like there's plenty of them. What is the biggest lesson that you've learned in this deal?
Oh man, the devils are in the details, because the underwriting, there's so many hidden spots for opportunities. I'll give you another one. When I toured the unit, I took my cell phone with me and I just took video and cameras. And I'd say, the majority of the units have the original toilet that was put in there a long time ago. Well, they're sucking probably 3 to 4 gallons every flush, and most of the units, the water bill is paid for by the owner. So there's a pretty big value add opportunity to basically put in the 0.8 gallon toilets, low flush, all that. It's not that hard. It ain't rocket science, but it's going to be a big, bump to the NOI.
Yep. Nope. For sure. I mean, we just went through a park that the OPEX, I think when we bought it, it was 70% ratio because their water bill was just through the roof. I was like, why didn't you fix this? The guy was like a multi-millionaire growing potatoes. And so he just forgot about this property. So
it's free money. Free money.
Yeah, exactly. Awesome. Well, that is it. That is the deal review. So Mike, again, thank you for hopping on the show.
Really appreciate you having me on, Gabe. Thank you so much.
Absolutely. And again, if you guys missed Mike's full episode, he goes deep into geo-niching and why you may want to consider moving to the market that you're actually investing in. That is one episode behind that. So go ahead, behind this one. So go ahead and check that out. Other than that, thank you guys for showing up. Again, you are the reason that we do this. So we appreciate having you here. If you have any questions at all, always reach out to us, therealestateinvestingclub.com. Other than that, hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode as much as I enjoyed putting it on, and we're able to pull some actionable advice that you can apply in your own investing today in the field. Before you go, we have a gift for you. If you're a new investor looking to get started or an established investor looking to take your investing to the next level, I've created an ebook just for you, available on our website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find deals that are actually deals, how to finance a deal with little to no money down, and how to exit those deals for maximum value. And if you get the ebook today, I am throwing in a bundle of bonuses, 7 of them to be exact. The first one will be the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating wealth in real estate. The second bonus is the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools, systems, and even the vendors we use to see the success that we do. And the third bonus is the top 100 best performing keywords pack, which will give you the exact keywords we use to target motivated sellers online using PPC ads. The fourth bonus is our contracts bundle for wholesaling and renting real estate, which will give you access to all the contracts we use in the field to execute all different types of transactions. After that is the investor's quick analysis calculator and offer tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automagically from those calculations. This is a lot of bonuses that I said. I'm just going to keep going down the list. Number 6 is the investor's daily success tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And the last bonus is the wholesaler's template for quick assignment cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. Whew, that is a bundle. So it's a mouthful. You get all of those bonuses for free when you download the ebook. All we charge is the admin cost to run the show. So if you're interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the Ebook Bundle at the top of the page to take advantage of that deal. And with that said, I hope you have a fantastic day and even better week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.